And before we get into segment 3, we'd like to remind you, please like, share, subscribe. Your support is appreciated. We keep seeing those subscribers grind higher. So it's something that hopefully we're doing a good job, providing you with some information that maybe you can't find anywhere else, and trying to provide some of this, the data, and also some color around what the data means and what does it mean going forward. So now that we look at U.S. Crude exports and product exports, you can see gasoline was up again, 260,000 barrels a day. We're still seeing a lot of this naphtha demand, and it's just a matter of how is it being classified, and here it's being classified as gasoline. So we're still seeing a lot of robust moves from the U.S. into Europe. And as we were saying last week, we expected to see this remain above the 5-year average. This is even higher than what was expected. There's also some of that timing delay in terms of when it's released. But again, still a positive number, still strong moves. 292,000 barrels a day above the 5-year average, moved from 651,000 to 911,000 barrels a day. Disti, as we were saying, small increase of 27,000 barrels a day. We don't see that moving too much higher as we go through the remainder of this week into next. Again, we have a lot of distillate, a lot of diesel coming from Asia into the Atlantic Basin. That's going to keep us fairly fixed for what we can send into the underlying market. Propane had a small increase of 25,000 barrels a day. Still 253,000 above the 5-year at 1.08 million barrels a day. Again, LPG demand is just going to remain strong, going to remain robust. So we still expect to see that set new records this year. Not a mixture of we have more capacity, so we have more abilities to, but also there's the demand to match it. So again, still seeing that elevated. When we look at crude exports, we were expecting a move back to about 2.7 million barrels a day. We had a drop of 619,000 barrels, came in at 2.8. Again, we expect to see this average between 2.6 and 2.8. When we look at the 4-week rolling average, it's right on the money at 2.7. So just again, splitting that up rates. When we look at where when we had the drop in front month Brent and WTI versus Dubai, we saw it get more competitive. And now with some of this increase in pricing, we've started to see that fall away. So again, it's just going to be a matter of where do you get the best deal? Where do we have some of this capacity? And as we head into the OPEC meeting, which is scheduled for September 1st, we don't expect them to adjust production increases. So, remember, they still have those cuts that are still there, then they're rolling them back slowly. We just don't see a pause in that. We just think they're going to maintain going forward. You could say Delta has become a bigger issue for them, but when you look at what they've accomplished, I think it's going to be very difficult to get them to agree to cut. If anything, they may agree to increase less or not increase at all, but increase production is what I'm referring to. So otherwise, I don't see them reversing it. It's just going to be, it would take too much political capital. I don't think that much unity exists to get some of that rollback. Instead, at most, it'll be just a no increase in production, or less of an expected increase in production, or just no change, and then we'll revisit it as we head into October. And I think that's the likely setup where, look, I get it, things look a little bit tough. We've had some draws, things are looking a little bit better on some of the onshore side. So, let's keep September the same and then revisit in October. And I think that's the likely game plan that we're going to see. But again, we'll revisit it as we get closer. So then when we look at the WTI versus Dubai spread, this is what we were talking about, where things were getting a little bit better, supporting some additional exports. And then as WTI increased in price, you can see Dubai really didn't do much. And that's where things moved more expensive again, getting closer to the $3, which is when you start looking at shipping rates, you're getting close to the cutoff. So there's still some demand for it, but just not as much. You'd rather pull Middle East, and we continue to see that from the Asian markets as well as some of the other European markets. And then something similar with Brent versus Dubai. Brent had got a little bit cheaper, but now Brent front month's moving up against Dubai. You're starting to see that move back out a little bit slower. when you look at just some of the moves in general. But again, just going to slow down some of those demands for Brent and WTI and keep things, let's just say exports moving at a much slower clip than what would be seasonally expected, as well as, also on that demand side, because we're just not seeing those pull-throughs and that demand that we should be seeing as the Middle East takes some of that market share, which, coming to the full circle to the OPEC thing, as you're taking market share specifically from the US and from Europe, do you really want to stop that? Like, that's really not impacting as much. You're still making a spread. You're still making money versus historics. So maybe let's try to maintain and maybe pick up a little bit more of that market share without sacrificing a huge amount on price. And that's why I think OPEC that's going to be kind of that stable move as we go forward. So now as we look at gasoline exports, we were expecting to be within the cloud, or slightly above the cloud. Here you can see broke way above. Just based on the naphtha moves, what we're seeing coming forward, we're still we don't expect it to go up much more, but it'll still stay above that top of the cloud as we go forward, or just within that little spike in that gray cloud, but still remaining strong, still a lot of movement as we head through the remainder of this month and then into next month, as we see naphtha demand remaining strong, and a lot of that coming from gasoline naphtha blend, which is being exported. So then when we look at distillate, here we were saying we were going to stay below the that cloud, and as we expect it to continue to go sideways. You can see there was this drop off. This was obviously from the hurricanes, but this is something that we just expect exports to go sideways. We don't expect too much up or down, which again is becoming something fairly stable. Then when we look at export data for U.S. crude, you can see that it's come back within this cloud, and as we've been saying, we expect it to go sideways, averaging between that 2.6, 2.8. So to see 2.7 holding firm going forward is a very doable and likely number, which is something that we're starting to get to, and we expect it just to kind of level off at this point and average, right at this capacity as we go forward, just because we're not seeing the demand. It's not really priced to move, so we're still going to see U.S. refiners consuming a little bit less, production still grinding higher to the low end of our spread. Because remember, we're expecting to exit the year between 11.5 and 11.7. We're right at the 11.5 number. So we'll continue to see some of this movement up, and we'll move closer to, I think, something along the lines and up closer to that 11.6 million, which is going to go back into that storage level. So when we look at propane and LPG, you can see here still seasonally adjusted highs. We expect it to remain elevated, especially remaining strong as we go through the remainder of the year. So then when we look at Genscape, here you can see in Europe, you got that nice drop off in crude and storage. This is something that it'll pick back up, but still remain down. So we expect to see a spike, but still a lower high, and actually coming in closer to where we were on the low side. So still fairly strong for where things are in Europe when you look at Europe's tank stocks. But then when we start looking at products, we have some of that product coming through, especially on the gas oil disti side. So that's going to be one to watch to see how they're managing some of this crude storage as well as this product storage going forward. Then when we look at loading schedules, you can see things have increased a bit in September. We have Libya back to those highs of about almost 1.2 million. As we were saying before, we expected to see a little bit of that increase. And then Angola has that little bit of an uptick from September and October. Nigeria, we'll see this come in closer to about 1.5 million. And then the Russian side will come in close to that, about 3.3. Congo saw another increase in October, so the question is going to be how much of that is going to continue to move. Now, when we start looking at spreads, ESPO crude at a premium of about $1.70, which again, that's still at a fairly low premium versus historics, closer to what we are in March. But then when we start looking at Angola, we start looking at some of those flow throughs and some of that capacity. And overall, we continue to see some of these drop offs. So now when we start looking at Urals had a little bit more of a bid behind them. It actually came in, it came across about 230 to 235, came in at about 215 below dated Brent. So right now you're seeing some of these offers between 225 and 215. That's above where things were at 230, 235. So at a 2-week high, again, this is what we were talking about with a little bit of stability now in some of the diffs market. West Africa is moving a little bit closer to normal. Shell bid Urals again at 230 versus that 240. So we're starting to see a little bit of that normalcy. And that's for September. So when we're looking about short dated 215 versus dated again September 12th, 16th. So again, that 230 to 215 is right where we continue to see, with some offer at about 225. Then when we look at Chevron offered about 1 million Usain for October 2nd to 3rd loading at dated Brent minus 80 cents. So we're still, and that, again, that's looking at some of these different cargoes on West Africa. In term, and then as well as we look into Europe. So some normalcy, your Asia's still weak, some firming, but again, still it's just firming at a much lower number versus historics, where when we look at Urals, CPC, starting to see about a 10 to 15% increase as we start to see some of this movement, but we're also getting into the end of the month. So what do you need? What's left on your sheets? What do you have to pick up? And then when you look at what is the first 2 weeks of September, and if you remember, what we have seen historically was that companies try to test the front end of the month, where you see some of these offers come in much higher in the first 2 weeks, and then they get cheaper as they go through. So we're starting to see that come down. But if you remember, they were closer to 215, I'm sorry, $1.85 to 215. Instead, they're 215 to 230. So you're still seeing some of this weakness, and it'll be interesting to see how the first 2 weeks of September go as we start coming into that slowdown. Because remember, you also have the end of the increase in demand in the Middle East as a lot of that cooling demand starts to abate. That puts a bit more crude on the water because they don't have to consume as much internally. That's going to increase some of those exports. Again, doesn't have to increase production, just increased exports. So to see how some of this impacts, because we've already seen Dubai pricing still remain fairly soft in comparison to Brent and WTI. As they rallied, you didn't see Dubai rally all that much, or Murbain. So again, these are things that to watch because when you start looking at Murbain at $70.60, that's still almost $1.25 off of Brent. So again, things to watch going forward. So now when we turn to Fujairah, so Fujairah had total stocks fall by 1.138 million. Which is the total loss. Total loss is a big reversal from last week's gain of 67,000 barrels, but it's all a matter of where. So light distillates continues to see builds up 29,000 barrels to 5.631 million, which is just, again, that kind of continuous small builds in general. And the builds came as Middle Eastern and Asian gasoline crack spreads took those cues in terms of where the U.S. is, some of these movements in general. But we continue to see that softness in Asia, which is keeping this, again, a lot of these light distillates stuck within Fujairah, where middle distillates fell by 85,000 barrels, and that down to 3.96 million, which is a slight reversal of last week's gain of 1.056. And as we continue to talk about, we expect the middle distillate side to see some of the steady increase as that demand in Asia just isn't there, and it's just going to be a timing delay as to when does it leave Asian markets, come into the into the Atlantic Basin, how much of it gets stuck in storage within Singapore and Fujairah. Where on the heavy resids side, it dropped 1.082 million to about 8.687, which is a continuation of last week's drop. And again, the biggest thing is the bunker market, starting to see some pickup in the bunker market. And as we get this pivot away from the additional demand for cooling within the Middle East, because a lot of that uses fuel oil, some of the cleaner stuff uses diesel. As that abates, you're going to see some of that get pushed back into storage, which will not so much have a big increase in heavy resid, but you start to see some of these the declines in storage, essentially abate and start to see some of these steady builds. Now, when we look at crude oil in the water, you can see we're back above the 5-year average, coming back into those highs. And remember, the comps get easier, as you can see 2020 collapsing down, and we're getting closer to some of this normalcy. But when you look at the 5-year average, there's typically a steady move down. Instead, we're having that move up, and it's a mixture of a lot of crude left on the water and some increase in oil in transit. So now oil in transit is back at the 5-year average, and that's really because we're starting to see some additional movements from West Africa, some additional movements from Asia, or I should say from Russia, which is putting more crude in transit. And it's just going to be a matter of as it shows up, and this is where we keep talking about why offshore storage is going to remain elevated, because as this goes from storage in one location, it's going to become storage in another. So you're just essentially transferring where these boats are sitting, given the issues, given the underlying supply chain disruptions, which is going to be problematic. So then when we look at total floating storage, you can see, again, slight move down, but it's just going to be that replacement side as we continue to see this moving sideways and again, remaining very elevated versus historics, obviously below 2020. But you can see that there was that strong move down in 2020 that we're just not going to see in 2021. So now when we start looking at European gasoline, gas oil, just products in general, you can see that gasoline had a small draw of 58 down to 677. Gas oil had a small build of 13. Fuel oil had a small build of 17, but still remains very elevated, as naphtha had a build of 57. And the builds in naphtha will continue as we see the movements from the U.S. into Europe. So when we look at gas oil numbers, as we were saying last week, we expect them to go essentially sideways as there's the demand kind of married with where that flow is coming from Europe, from Asia into Europe. So we expect to see this start to move closer to that 15-year average, but again, it's still going to remain in a fairly bullish backdrop when we look at what is normally happening this time of year. Now, gasoline, you can see, had another big drop. We expect to see this start to reverse. And when you look at the 5-year, that 15-year average, the average gets a little bit easier, but it's still going to be in a bullish backdrop. You're still going to see some of the support because we don't see it getting back to that average in the near term. It's just going to see some of that stabilization and some of that grind back up. But it's just going to be a manage of where's the most money to be made. Is it going to pad one versus staying in Europe? And these are going to be things to watch. As fuel oil still remains at seasonally adjusted highs, expect to see some recracking some of these movements as they try to manage some of this fuel oil. Then when you look at Singapore had a drop of about 500,000 barrels from 46.6 to 46.1. So just, a new low for 2021 as we get some of these steady moves, but it remains mixed as, we continue to see builds in light distillate, draws in middle distillate. Remember, as we're seeing things sold from middle distillate coming into the Asian markets, from the Asian markets into the European markets, because the spread is there, it supports it. So this will be backfilled. It's just going to be that timing as to when does middle distillate start to see that pick back up. So when you look at middle, when we go over the last 15 years, you can see that we're just below the 15-year average. We expect it really to continue, as we were saying here, to go sideways. It's just going to be a matter of when does that big increase come to essentially restock what has been drawn down, because the demand just isn't there in Asia. And Southeast Asia, Asia in general. So that's, again, going to cause some of these movements over the near term as light distillates continue to go sideways. And we expect this to remain elevated as we go through the next few weeks. Some recovery in time spreads. There's a mixture of, because October is starting to roll off, so you're starting to see some of this unwind. But again, the front month time spreads still remain stronger, but they still remain a bit weaker as you go further down the line. And it's just a matter of where is demand. Some of those demand numbers have gotten taken back, but the supply expectation hasn't changed. So that is putting a bit more pressure towards the back end, which we saw here, where when we look at December versus December, had a little bit of a bounce, but again, nothing like we have seen as we continue to see some of that softness as you go into the later months. And it's really when you start looking at some of these situations, especially when we look at Singapore crack spreads still firmly negative, still not seeing that demand in Asia, but you are starting to see a little bit of that ARB, or a lot of that ARB open up for the distillate side, which will help pull some of this excess out of Asia into the European theater, as hydrocracking remains at seasonally adjusted near all-time lows. Urals still in the positive front, which again is continuing to see some of that move through, and that's supporting some of that increase in spreads. Again, nothing crazy, because if it gets too high, again, then it'll start to price itself out of the cracker. But that's something to watch in general. As when we start turning to the Mediterranean, you can see that we're still seeing this bifurcation where things are still positive, but just barely. And then when you factor in storage and shipping, it's actually a bit more, just negative, which again is looking at Urals versus Libya. Libya, again, is keeping pressure on the Mediterranean Ural side, and they're trying to manage and optimize what is coming into that system. So then when we look at crude imports or China's supertanker crude imports, you can see that we're just moving along the 5-year average. We don't see that changing one way or the other, especially given the amount of crude sitting in the offshore markets. It's just going to be that timing delay. So we expect this to continue to move down with that 5-year average. Then when we look at refinery run rates, a little bit of a pickup in Shandong or the teapots, but you can see on a seasonal basis, this is typically when we start to see some of this flatlining. And based on what we're seeing, what we're expecting, what we're hearing, we expect these run rates just to go sideways. And when you look at the seasonal comps, you can see that as the comps get easier, and will be closer to where we are on 2018 and 2019 levels. So seasonally normal versus historics, which again, based on the amount of crude in storage, the amount of product in storage, there's more than enough. So there's no reason to see this increase over time. And here's where floating storage increased a little bit. And as we've been talking about constantly, we expect it just to go sideways. Some of that will be taken down. Some of that will be replaced. Some of the ports open back up, you'll start to see an acceleration. It's just we're not there yet, and we'll talk about that again in the econ segment 1. North Sea had a bit of an increase. When we look at what's happened in Europe onshore versus offshore, we expect to see some of this come from one to the other. But as we've been saying with the North Sea, we expect a very sideways move, and that just means that comps again get easier as we progress into September. Then when we look at what we're seeing for West Africa, a little bit of an increase. Again, there's been a bit of an acceleration of purchases, so we expect to see storage in West Africa come down, as a lot of that, or not a lot of it, but some of it has been pulled into the U.S. markets, even European markets, but more importantly into some of the Asian markets. We're same with the Middle East. You can see that along seasonal norms, when we look at 17, when we look at 2020, we had this drop down along seasonal, but we expect this to again remain elevated as we're still at the higher end when you go back through the average of 2021. And unless we get some big shift in the increase in production out of OPEC, we expect this to continue to go sideways and even drift higher, which realistically will be between where we were in 2016 and the other 4 years. Europe had a little bit of a drop down. We expect this again to remain, go sideways. So we expect this to have a bit of a recovery, still remain at the bottom end of that cloud. And then when we look at Shandong, when we look at crude storage, you can see still very elevated, not much changing over that time period as fuel oil continues to shift higher, still staying at near all-time highs, just off of those 2014 levels and near the highs of 2021. So again, there's going to be a lot of trade moving and a lot of uncertainty, especially when we look at some of the underlying backdrops. So I hope this was helpful. If you have any questions, please let us know. You can find me on Twitter at MarkFNY. Always happy to talk by email. Rossano at c6capitalholdings.com, or obviously in the comment sections. So thanks for watching. We hope you have a great rest of your Wednesday. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.